Your credit score is one of the most important components when you're getting a home loan. So whether you're refinancing or doing a purchase, that credit score is one of the three major things we're going to look at for qualifying the loan. But not only for qualifying for the loan, your credit score is actually a driver of what interest rate you're getting or what fees that you're paying. A lower score may even push us to a different program that might not be as good, but would qualify you using the credit score you have. So credit score is important for qualifying, but also for what loan program you're going to be in and for what pricing you're going to get. So it's definitely something you want to pay a lot of attention to. The hardest part about that credit score, though, is that technically it's a proprietary formula. So we can't like sit here and calculate your credit score and know exactly how they're coming up with it. But there are some basic, simple rules and things to do with how to keep your credit score higher or how to get it higher. And so first, just a little basic understanding. If you're doing a conventional loan, really anything that's 760 or higher, a lot of times even 740 or higher, we consider top tier credits. Being 800 versus 780, you're not really going to see any difference at all. That's all the same. Once you drop down under that top tier credit, every 20 points, you're going to see a difference. So you'll see different, slightly worse pricing from the lender for that lower credit score. And then I would say if you're purchasing a home and putting down less than 20%, once you get under 700, you're really going to an FHA loan versus a conventional loan. So that is one of the spots where it makes a huge difference. So those are just some basic things to know with your credit score. One other thing that really tends to trip people up often is they'll run and get a credit score online or through a service with their bank, and then they're shocked when it doesn't match what we're using for the mortgage. And really the reason you're seeing that is it's actually calculated different ways. I told you it's a proprietary, which is a tough word, but a proprietary formula that they're using to calculate your credit score, but they actually calculate it differently depending on what you're doing. So if you go buy a car versus going to buy a house, you're going to come up with a different score. Or you're going to go get a credit card, you're going to have a different score. And then there's 3 credit bureaus. So we run all 3 credit bureaus, and then we use the middle score. So that middle score is where you're at. If you're in the process with us, or if you want help on getting yourself ready and you know you need credit work, we are happy to help you walk through that process. We would pull your credit, and then really all we have to do to get your score up is fix the bottom 2 scores, right? The top score we can kind of leave alone if it's higher, and then there's 2 that are really low. We're going to work on the bottom 1 score, because if 2 are up, now we're just using that middle score, right? We're happy to help you through the process with it and help you fix your credit and get it where it needs to be. Some simple tips if you're doing it yourself. The biggest thing I see that drives down credit score is collections, whether it's a medical collection or whatever it is. Really the key with those is dealing with that creditor, not just paying it where they mark it paid, because you won't see your score come up a lot from that. What you want to do is work with that creditor where you give them the money and then they're willing to remove it from your credit report. Having that collection removed will jump your score tremendously. So that's one. If you don't have a lot of credit, what I typically recommend for people is get a credit card. If you got declined for a credit card, find a secured credit card where you can put up $1,000. They give you a credit card, and then you treat it like a normal credit card until you're done with it and you get your $1,000 back. Basically, it gives that creditor, hey, if you ran up $1,000 and chose not to pay them, they have the $1,000 to cover it. But a secured credit card is a great way to start building that credit if you can't qualify any other way. And then again, I would recommend getting 3 pieces of credit. So I wouldn't do them all at the same time. Typically, I tell people if you have no credit right now, get 1 credit card, wait 6 months, do another, wait 6 months, do another. That tends to build your score the fastest. There are ways to get a mortgage without having a credit score and without having any credit. It is possible to do it, but I would really recommend just building that credit. If you have, even for clients, if you've had problems with credit in the past, get the credit card, cut it up, throw it away, keep it away from you, whatever you need to do. But having that card is really helpful. Another huge key is keeping balances below 50% of the limit. So if your credit card has a limit of $10,000, you don't want to have a balance over 5,000. The higher you are, typically the more we see your credit scores go down. So if you have, say, 4 cards that add up to a total balance of 15,000 and you owe 14,000, we're going to see much lower credit scores. So beyond that, fix collections, have 3 things on your credit report, keep balances below 50%, and then really the obvious easy one, just make on-time payments. Those late payments are really gonna hurt. The good news with that is the further you get away from them, the less they hurt. One thing we do see is, say you had a late payment or like 3 or 4 late payments a year ago, you get a year later, a late payment is going to hurt you a lot more than it hurts someone who doesn't have any late payments. They're seeing like a trend start over again. So that's something else. So if you do have these late payments and things and there's no collections, just start making good payments today and you're going to quickly see that score start to rebound. We're happy to help walk you through this process, help you with your credit score, so that you can qualify for the best rate, the best mortgage for you. We'd love to walk you through that process. Please reach out if you have any questions, and we look forward to working with you.